my gosh, we're in a recession, but the stock market's rallying. What is happening? Well, in this video, I'm going to explain exactly what's happening because that has everything to do with the Federal Reserve. I just want to show off the most amazing view ever. That's right, folks. Meet Kevin and the expiring coupon code for 50% off on the programs on Building Your Wealth. A link down below. I will be back from vacation on the 1st, and this is the end, folks. This is the end of vacation season. So I think the market is pre-rallying, A, because it's the end of vacation season, and B, here's the scoop. Jerome Powell told us something very, very important yesterday, and I think most folks kind of cast it aside because everybody was waiting for these GDP numbers to come in. Jerome Powell told us that it will be appropriate in the future, in the near term, to start reducing the pace of rate hikes and has already mentioned that production and spending and demand in the economy has started to slow. This is the point of monetary policy, combined with the fact that they said that once they get to neutral, there is a lag between how much monetary policy, that is Fed policy, affects markets, affects demand, essentially consumers spending money and businesses. In English, okay, in plain frickin' English, the Federal Reserve, at this point, is starting to realize, okay, all right, we've done enough. It's time to slow down. Especially since what we've done reacts or hits the market with a delay, which means the actions that we have just taken and have taken over the last couple months will still take some time to actually play out. So let's chillax a little bit. As a result of this chillaxing, and us officially being in a recession, markets are cheering. Now, why would markets cheer? Well, because, folks, remember what I said in January. On January 22nd, I made it crystal clear that the bottom of a market is when the Federal Reserve U-turns. Now, markets have been expecting this and the potential for an earlier bottom because we're kind of pre-pricing that the Fed was basically going to U-turn soon. But previous bottoms have been 1989. You should memorize these. Memorize these, okay? 1989, Fed bottom, market bottom. 2003, March, market bottom. March around of 2009, market bottom. 2018, December, market bottom. March of 2020, market bottom. Okay? I have these memorized. I got nothing in this like pink and purple room here, okay? Nothing, just me, okay? Memorize those. It's so important because in 1989, the Federal Reserve established the precedent of bailing out the market. Now, now we have this very clear precedent that the bottom of the market occurs when the Federal Reserve U-turns. And so markets have been pre-expecting the Fed to U-turn. This is why markets bottomed in June. So why are we rallying like crazy now? Why all of a sudden are we seeing a risk-on move? Well, first of all, we're seeing a risk-on move in solar stocks because of the Biden energy stimulus that we have seen, the $369 billion energy investment that extends the solar tax credit through 2025, January 1st of 2025, and provides more EV tax credits for not just individually owned vehicles with no limit per manufacturer of $7,500, but also commercial vehicles up to potentially $40,000. Watch the details of exactly that plan in the video that I made this morning. You can just search for it, Meet Kevin, Biden Targeted Stimulus, and you'll see it. It's also called the Inflation Reduction Act, which is total bogus, although what'll be really funny is we're probably going to pass the Inflation Reduction Act within the next month or two, probably within the next month before midterms, and you know what? Inflation will probably go down like immediately right after. And so Democrats will go into November going, see, we passed the Inflation Reduction Act in August and inflation went down in October. You should vote for Democrats in October because we were just dealing with what Trump gave us. Dude, I hate politics because that's not why inflation went down, okay? It is absolutely not going to be why inflation went down. However, you also have to be fair to Biden in that he did not cause all of the inflation. Okay, we had a lot of stimulus before he came into office. The extra $1,400 stimulus package, probably not a good idea. Shutting down the Keystone Pipeline, probably not a good idea. But he's not responsible for all of the inflation, okay? Anyway, this isn't a political video. The point of this is the stock market is believing that, oh my goodness, this is a Fed U-turn. This is the equivalent of a Federal Reserve U-turn. Now, it may not be, because inflation may not go down. However, the bond market believes that, no. Inflation will be going down. Break-evens are down. Consumer expectations of inflation are going down. That means inflation should be going down within the next 2 to 3 months. That's very good. And if that's the case, the stock market deserves to rally. And you should be invested in the market. Hashtag not financial advice, but you should be in the market. I've been saying you should probably be in the market since QQQ was at 318, okay? And look, I realize we went all the way, we went a good chunk below that. I get it. I'm just saying. You want to be part of this market because I don't see a substantial further bottom. I'm going out, I'm putting my neck on the line here. I think the second half of this year is going to be glorious. We just went through a 7-month disastrous bear market. It has been cancerous. People are yelling at each other, fighting each other. I've had to turn off comments because they're cancerous. I'm actually a lot more productive with the comments off because I'd spend so much time reading the comments and just make me feel like shit. And it even washes out the compliments. There could be 9 compliments and one person going, "You suck." And it just ruins my day. It's terrible. And I can't stop. I can't stop looking at the comments. So anyway, now I just care about what people say in Discord. Go to metkevin.com/chat. If you want to chat with me on Discord, you can tag me there for free. It doesn't cost you anything. But anyway, look. The bottom line is, not only are we seeing a rally in the solar plays because of this energy plan, but that, I think, is starting to prop some names up a little too high. Enphase, sexy stock, love the company, phenomenal growth rates, PEG ratio, relatively close to 1. I mean, you've got a PE ratio of, I think, 70 and a growth rate of like 60%. They are absolutely killing it. I love them, absolutely love them. That EPS bottom line number is growing so nicely. But they're too pricey, I think, in this market relative to other deals. I know that sounds crazy because they've been going up, but I think the next run is going to go to chip manufacturers once they bottom out with chip inventories. It's going to go to retail stocks. That might be Amazon. Etsy's already blown up. I was looking at Etsy when it was $70 and telling everybody, hey, this valuation for Etsy is remarkable. And now it's back at $100, and it probably has more run to it. But I do want to say this. As much as we're seeing euphoria, that euphoria can quickly shift. If we get bad CPI prints over the next 2 months, you're going to want to have money for a rainy day. So I'm not the biggest fan of saying that's it, now's the time to go all in, YOLO margin. I don't think I will ever say that. First of all in, go all in on margin. I don't think I'll ever say that. In fact, it's during euphoric times that you generally want to start thinking about taking money off the table. We are not at euphoric times right now. We're coming out of hell, which does not mean we're at euphoric times. Now, I also understand that there are a lot of folks who are like, but Kevin, I don't want to buy on a green day because, like you've taught us, Kevin, only buy on red days. Yes, but. When you're coming off a bottom, it can be okay to buy on green if you are diversifying and you're not in. Like, if you're not in the market, I personally think that's a mistake and you're a little bit behind. The bottom's probably behind us. No guarantees. It could still come. But I wouldn't want to make that bet with a large portion of my portfolio. So I believe that the risk on rally we are seeing right now is not only a combination of the belief that the Fed U-turn is now charted, that the inflation decline is now charted, that we are now actually in a recession and now is buy time. I've always said that the time to buy is in a recession. And I've also said since the beginning of the year that we will probably face a paper recession. And when we face that paper recession, you're going to want to buy because you're going to get the Tucker Carlsons of the world that are going to come out and talk shit to this market and consumers and everything. And then you're going to get some consumers who are going to panic and start spending less money. But so far, they haven't been. Now we'll see. Now that we're officially in a recession, this is another downside risk. So I don't want to sound like Mr. Bullman. I want to be clear. We do have the downside risk that now that we are actually in a recession, everyday consumers who have not been paying attention to the fact that we're in a recession might start thinking to themselves, oh my God, we're actually in a recession. I mean, Biden might not think so because he's trying to redefine it, but we are actually in a recession. That's scary. Maybe we should spend less, honey. It is possible that we have been constraining while the recession was actually happening, and that consumers, average consumers, may now just begin to do so. So you do have to be careful. There could still be additional downside risks for consumer stocks. However, they've just been so depressed, I don't know how much more they can go down. But again, if we get a bad CPI read in August or September, expect massive discounts and potentially another 2 to 3 weeks of red following a bad read. So, in my opinion, be careful with YOLO bets. If you want to upside hedge, you can get in the money calls that give you some exposure to leverage without exposure to margin. And if your stock YOLOs up, there you go. Now you can take your tendies. But be careful. YOLOing a large part of your portfolio. Stay strong out there. Use the 50% off coupon code down below. It expires tonight, so you may as well take advantage of it. And folks, we'll see you when I'm ready to launch the Series A. Thanks so much. Goodbye.